Okay, good morning, broski. Episode number 2 of our trading strategy. Today we are going to talk about liquidity sweeps. Okay, so what are liquidity sweeps? What is liquidity in general? Okay, let's discuss this. Let's go here. Let's draw it. Okay, so as you know, bro, market moves in higher highs, which is like that, and higher lows. Okay, this is in an uptrend. And in a downtrend, the market moves in lower lows and lower highs. Okay, this is the movement like that. Okay, but what happens when the markets want to change direction? When they want to change direction, they will do a so-called liquidity sweep and then change the direction. Okay, and then when the liquidity sweep happens, the market has the potential to change the direction. That's very important to remember. It has the potential to change the direction. So what is actually a liquidity sweep? Okay, look, when the market moves up and down, up and down, up and down, up and down, we have pending orders above the highs and below the lows. Okay, what are pending orders, bro? What are all of those orders here? Those are actually all of the orders that traders were putting when they were trading. Okay, because for example, look, when the market went up, the traders were saying, okay, shit, the market is going up, I'm sure it's gonna go up again. Okay, I mean, it's gonna still go up. So they enter a trade right now here, and then this is their position. Let me quickly explain it. So they enter a trade in this line, and they are hoping that the market will go up to this line, which we call take profit. But if the market doesn't go into their favor, then they will automatically sell their position here at this point, which we call stop loss, so that they don't lose that much money. Okay, so yeah, the traders enter a trade right now here, and then they put the stop loss below, let's say here. Okay, and then they are waiting to see what the price will do. Okay, so here we already have one liquidity. Why? Because if the price pushes below, like under this stop loss, that position is going to sell, and the money will start flowing from those traders' bank accounts to the market. Okay, same here. For example, let's say that what happens, for example, when one guy sees, okay, the price went up to this point, I'm sure it's gonna go down. Okay, so when the price goes down, he enters a position and he puts a stop loss just above this high, so that the price, in case that it goes below above this high, he like sells the position for this amount. Okay, so here again we have liquidity. Okay, why? Because when the price pushes, in our case, above this stop loss, the money goes from his bank account to the market. Okay, so this is liquidity. Liquidity actually represents the flow of the money. Okay, the movement of the money. So this is liquidity. Okay, and what happens when the market wants to change direction? Okay, so all of the banks and all of financial institutions actually know where our money is. They literally know that Yasharod, for example, has put his stop loss here, for example. They know that, for example, John Dick has also put his stop loss here. They know that Marcus Tittenberg also put a stop loss here. Okay, so they know where our money is. So what do they do when they want to change a direction? They will push the price down. Okay, they will push the price a little bit down. They will force people they will trick people into thinking that we have made a downtrend right now. So more people will start to put stop losses here, more people. And then what will they do? They will push the price above this point, okay, and force all of us to sell our positions, okay? And this is what we call a liquidity sweep. And then all of that money will start flowing through the market, and then we are going to go down, okay? This is what we call a liquidity sweep. So liquidity sweep actually means that we push the price past a certain point where there are a lot of resting orders, a lot of pending orders, okay, a lot of money, you see, a lot of money is here, and then we reverse and we go into the opposite direction, okay? You know what I mean? Let's do an example also here on downtrend, okay? So what will happen in the downtrend? We have pending orders here, 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 here, everywhere, okay? So right now people are thinking that we are going down, okay? So what will they do? The market and all of those banks and financial institutions are gonna say, okay, let's trick people that now we are finally going up. So what do? Yasha wrote, John Long, and let's say Markus Tittenberg, okay, they put the longs right now here, okay, they say, okay, good, we are going up. I'm gonna put the, what the fuck, why is this so small? We are gonna put the buy position like that, okay, and what happens then, this is exactly what they wanted. So the price goes up and then bam, psych bitch, you got stopped out, okay, because not only me, but Markus Tittenberg and Long John, we all got stopped out here, okay? Our money starts flowing from our bank accounts to the market, and then what do? The bank institutions and all of those financial institutions, they push the price up, okay? So they swept liquidity and then they push the price into the opposite direction, okay? This is what a liquidity sweep is, and a liquidity sweep literally happens on every single time frame, on every single asset. Whenever you are trading, it always happens, okay? And it's so fucking obvious, it's so beautiful, okay? Look, for example here, let's take a look at some examples right now here. Look, the movement went down, okay? It went up a little bit and then down again. So what were people thinking? People were saying, okay, nice, we went up, so now at this point we are going to go down, okay? So they went down, they swept a liquidity and then they reversed. Look, literally this happened when? During the night. They swept this liquidity and then moving up and up and up and up. So all of those people who were actually putting let's say short positions right now here, okay, because they saw that, okay, we made a little retracement and then they were targeting lower, you know, they got stopped out here, okay? Same people here, for example, at this point, people were seeing, okay, we are going up, 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 up. I'm gonna put my buy position right now here, put it below this low, and then we are gonna go higher. No, we went down, we stopped you out, we swept the liquidity, and then we went higher. You see what I'm saying? And this happens literally on every single time frame, okay? So what do we do in order to identify where the liquidity is, and what do we do to kind of figure out where the liquidity sweep happens? Is to go first on 4-hour time frame and start marking all of the highs and all of the lows, okay? Because right now we already know what highs and lows are, okay? So we're gonna go like that, we're gonna mark all of the highs and lows, and then we will go to 1-hour chart and do the very same thing, okay? The very same thing. So let's say, okay, look, here we have a perfect example of liquidity sweep. Look, we went down, 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 down. We went a little bit up. So here people were thinking, okay, we are going up. I'm gonna put my buy position right now here, stop a loss below this low that we created. And then what happens? Oops, sorry. And then what happens? Price went down, sweeps the liquidity right now here, and then it goes up again, literally up this time. You see what I'm saying? It happens on every single fucking time frame, bro. That's why I like this strategy, because it is logical, although I'm losing a lot of money, but it is fucking logical, okay? Look here as well, up, down, that's a high. What happens? We are thinking, okay, we are going up, up, up. Oh no, we are thinking, okay, we are going down, down, down. We put stop loss here, like this. Ah shit, I have this magnet thing. Okay, we put stop loss like that. Then the price swept the stop loss, and then it actually went down. You see here, this is a liquidity sweep. Oh my god, this happens on every single fucking time frame, okay? On every single fucking time frame. So look, here right now we are also sweeping. No, we are not sweeping. So that's it, okay? For example, let's take another example. Let's take a look at another example. Here, that's a low. Down, up, a low. Look what happens. Price goes down, sweeps the liquidity here, and then it explodes up. Same here. Move down and a move up, it's a low. Price sweeps liquidity, fucking explodes. You see what I'm saying? It's so fucking amazing, bro. So fucking amazing. Look here. Down, up, that's a low. What do we have here? What do we have here? A mini liquidity sweep. Price goes up. You see what I'm saying? Oh my fucking god. Oh my fucking god. Here. Up, down. That's a high. What does the price do? Up. Sweeps liquidity. Boom. Disaster. You see what I'm saying? You see what I'm fucking saying, bro? It's amazing. It's amazing. Amazing, amazing, amazing. So what are we doing right now actually? Right now, bro, we are waiting that the price will go past one of those liquidities, you know, that it sweeps the high time frame liquidity, which means high time frame liquidity means liquidity on 1 hour chart and on 4 hour chart. Okay, this is high time frame liquidity. And yeah, we are now waiting that the price does that, and then it's gonna potentially reverse. Okay, look, we already swept this high right now here. At this point, we swept the high, we are sweeping this high. And then if the price will go all the way to this high, then this high is no longer, this high right now here is no longer valid. And then we are waiting to sweep maybe also this high. And then we go down and we start sweeping this fair value gap, this. Okay, you see what I'm saying? So that's the liquidity sweep. Okay, let's revise it again just to make sure that you understand. Okay, so the market moves in higher highs and higher lows. Okay, it moves in that direction. Okay, so what is a liquidity sweep is then like this. The market will go down. Okay, people are gonna put orders right now here. Okay, all of those orders, and then the market will go up above those orders, sweeps that liquidity here, and then it goes down. Okay, same with the selling positions. For example, when the market goes down, with buying positions, the market goes down like that, and then what does it do? Look here, it sweeps that liquidity and then it goes up. Okay, this is called the liquidity sweep, bro. Oops, sorry, not this, but this right now here. This is a liquidity sweep. Why? Because it swept that last liquidity right now here, and then it starts moving up. Okay, this is it, bro. Okay, that's it, bro. This is liquidity sweep. We see each other tomorrow with, what do we have? We have break of structure. Where is that little table? Yeah, here. Tomorrow we have break of structure. So stay tuned, bro. Do the hard work and see you on top of the world. By the way, bro, feel free to join our free Discord server. Okay, it's the first link in the description. We have it right now here. I have to do the daily analysis. Look, we can go here to the stock market. We have daily analysis of the market. We have trading breakdown. Look, yesterday as well. Look, bro, look. The price went down, swept this liquidity in the fair value gap, which is something that we are going to learn later. Swept liquidity, went up. Above this liquidity, look, swept liquidity right now here. Boom, disaster. Okay, went again, retested this liquidity, swept it, boom, price went down again. This is so easy, this is so logical. Okay, So feel free to join, bro. We have a lot of knowledge here. Do the hard work and see you on top of the world.